Hello. Did you know that most retirees are going to end up overpaying taxes and they don't even know it? Well, they've spent 20, 30 years saving for retirement in investment accounts, 401ks, and IRAs. But inside those 401ks and IRAs is a tax burden that is percolating every single year. And it will come to life when they have to take monies out of those accounts when they're either 73 or 75 years old. These are called required minimum distributions, or RMDs. So what do? One way is to take monies out of those IRAs, transfer the funds over to either investment accounts or into a Roth IRA, which is 100% tax-free. A lot of people call this a Roth conversion. You have to take monies out of those IRAs, transfer it over to the Roth IRA. There will be a tax burden on that, but probably a lot lower than it will be down the road. Those investment accounts are subject to more of a capital gains rate than ordinary income tax rates, which are lower. So let's go over a case study. So we have a family, John and Jane. They're currently working, making $250,000 a year. So their tax rate is probably at a level where it's not advisable to take monies out of their IRAs into a Roth or a Roth conversion quite yet. They plan to retire in 2030, another 4 years. They're going to be spending about $100,000 a year. They have Social Security benefits of $80,000 a year. And over time, they've built an investment account, about $400,000 and $2 million in IRAs. So they feel in pretty good shape. Well, we've gone through the numbers, and it's most advisable for them to wait until they retire and then take $150,000 a year out of those IRAs for about 7 or 8 years. This will result in a much reduced premium on their Medicare, as well as taxes on the required minimum distributions, or the RMDs, when they have to take those out. So here are the numbers. They will end up saving on Medicare premiums right around $60,000, $65,000. Medicare premiums are based, as we all know, based on income. So if your income is lower, you will pay lower Medicare premiums. We call them IRMAA, but they're premiums on various Medicare benefits that you'll receive. Now the big one, what about the RMD tax? That will be reduced by over $300,000. And the reason is their IRA balances are going to be lower, and their RMDs will be lower as well. So it all comes down to planning for retirement, planning for taxes. You can always build an investment portfolio after the planning is done, but it all starts right there. If you think we might be able to help you, give us a call. There's no better time than right now. Our telephone number is 215-540-0896. We'd be more than happy to have a very relaxed, confidential telephone call with you to see if there's a fit. If so, we'd be happy to help you. Thank you so much for your time. Look forward to talking to you.